Go. Okay, what's up, guys? It is, what is today? May 15th. Today was actually a green to red day for me in my shorter terms option support. And the reasoning behind that was, first of all, the move in the overall market was a little bit of a curveball to me. We had CPI today, and um, we had CPI today, we had PPI yesterday. And it was a little bit of a curveball in terms of like how the volume sequences were leading into the previous distribution on the chart itself. So whenever you're looking at this from a perspective of an all-time high, and then that all-time high being like a failure to break out, and then a pushback beneath into the preliminary resistance bar created over here, and then several seller asks that are holding this level, holding the level, holding the level, and then we finally get that breakdown happening on April 15th. Okay, and then we recorrect into January OPEX levels, maybe this little bull gap over here beneath this low, and then we start finding that bounce. Now that bounce is bringing subsequently higher low after higher low after higher low in the daily chart, right? And then we also kind of pushed our way higher into sell side imbalance as well as the breakdown spot. This is all one big area of progression. We lost it, and then we pushed into FOMC. That's whenever you get this candle. This is the FOMC candle, and then we put in a hammer right after that day. Now FOMC was a pop and then a drop. I thought for a moment that bulls were trapped there, but I don't think really anybody knew the overall sentiment of the market on this daily candle closure here. This also could have been trapping like any sort of bear flag trader beneath this low. And then once you see the print back above and then the closure back above and actually reclaiming this progressive spot, or putting in an inside bar and then a gap up above the local swing high afterwards, I guess you could say that this is relatively a decent long side trade. But aside from that, guys, I was really only ultimately trying to trade charts that I felt very comfortable trading, and those being like shorts over here, the short on the pop, the short down here, maybe some small long side trades in between. But I never was really waiting for any sort of long side trade as we were pushing up into this previous larger range of distribution happening. Now, I understand that we're in a major outlier bull market where breadth, meaning sectors can start finding a bid, and then it's going to carry the market higher as a whole itself. And that is something that I guess I wasn't necessarily considering a lot. But into the tech reports, guys, we never really got any sort of crazy buy signal. Obviously, Apple was a really bullish setup. But aside from Apple, well, that's the thing. I was thinking aside from Apple, and that wasn't, I could have caught some really nice long opportunities here with understanding what the earnings reports were ultimately about, with all of these reports having a ton of buyback in them. Um, Apple had a record buyback on its report here, as well as a really nice gap up and a beat on revenue and EPS. So this is likely going to consolidate and bull flag its way out, likely into some sort of like previous swing lower support that we lost and then reclaimed and reestablished a bid and higher lows off of, and that's exactly what we got. We got the follow through it. So Apple was a really nice long opportunity that I did miss. I want to talk about missed opportunities before I dive into the trades that I did take. I was all over Oracle and in Oracle this week. Oracle was a really nice 200% win on a full-size trade on next week expiration. Really, really nice volume patterns and daily structure here. We were getting a whole entire fill of the bull gap, and then from there, that's whenever you find your pop. And then first pop, drop, higher low, spotted, and then a secondary pop, with this being the external high created, this being more and less of a daily level where you're looking for daily print and bases off of. We never truly got the base because we pushed into resistance and then we started to fail it, but subsequently we got this 4 bar sell candle series where you're kind of just looking for that third higher low. Now, where that third higher low is typically going to come from, I'm taking the pivot low to the pivot high, swing low to swing high. I'm looking at discount or beneath, and that's where I was accumulating my calls off of. So I started a position on Oracle. I believe I started a position on Oracle. Was it Tuesday? I think it was Tuesday. And then I started accumulating this at lower spots into, or no, 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 no. Where did I start buying this? That was the wrong Tuesday, by the way. I was about to say. Okay, no. This was Tuesday. The news was Tuesday. I started buying this Monday. So I noticed the sell, and then I started to notice how there was ever so slightly just a buyer coming in, but that buyer started hitting the tape a little bit hard. If you come over here and you start looking at this, you're going to see, oh my gosh, um, okay, we get our gap down, but then this was a really low volume sell right off the open. As you could see, 930 print right off the open. This is only a 1.492 thousand volume sell candle, and for the opening print volatility, that's very low in terms of sell volume. And then we started to find the heavier volume buyer, and then he started to just creep his way back in to the picture on a secondary lower low, and then we started to get that pop. I started to load on the higher low. The higher low failed, but I had 2 weeks of time here. So this started to trickle back down. Keep in mind, I'm kind of just accumulating this off of discount and a higher low from this pivot low. And my risk, what my risk tolerance was, guys, was to take beneath this low, look for a buyer off of the golden pocket, as well as a fill of this little mini bull gap over here. And if that weren't going to be the case, then I would have just cut the trade and got out for a loss. I think my total most drawdown on this trade, adding contract by contract on this base throughout the day, I think I want to say this was a drawdown of down here, probably like 15%, so it wasn't anything horrible and it was very manageable considering that I left a little bit more room to add because I was willing to go really heavy on this trade. I really like the chart and I've been watching the chart for a while. Um, and Snow was a really nice proxy to this one. This is a cloud stock, so whenever you want to look at industries, we caught Snow last week, and this was a really beautiful chart today. But let's just go back to the Oracle real quick. So I noticed the secondary the following day after I overnighted it, and then what do we get? We got this really nice move right off the open, yet it never really pushed and based what I wanted it to push and base. If you guys aren't aware, the Oracle chart that I did post was this. Oracle Daily. Alongside focus, looking for 115.80 bounce if we do get it. Already have exposure in bi-weeklies. Snow tape strong today, and we really like to see cloud names catch a bid again. I'm willing to add this into the sweep and hold of last week's low, this unfilled gap, plus the unfilled gap if a buyer appears. If not, I'll take the loss like a good trader would. So I already had exposure on the close of that day. And then we come back over here, and what the original plan of last week was, guys, was something that looked like this. It was a find a higher low off of this buy side move, find a low. You could see how the sell volume on the hourly chart is well controlled. And then we do find a low, and then we rally we recover, I should say, into close in the midst of this bull gap from the week beforehand, right? So this is where the watch really started to interest me. And then from there, what I was looking for was something that looks like boom, boom, boom. No, not that, not that. This, and then this. Now we didn't get that, but like I said, I got another opportunity to identify a base, and then I started to notice how, like I said, you go into the intraday time frames, you're gonna be able to see how, um, where are we? There was some heavy volume pops in within this overall range down here, like right over here. Nothing too crazy though. This was just a really low volume day, which is what I ultimately like to see. This little structure of candles here is similar to the Johnson and Johnson chart. So I'm going to go over to that now. So this was a little bit higher of a really notable higher volume here on Johnson and Johnson. Really heavy volume, 4.5% gap up on the day. Keep in mind this did sweep a previous swing low, so whenever you think about traders being underwater over here, caught off sides, and potentially flipping long on a higher low, that could definitely be the case. And then healthcare as a whole kind of caught a bid on this day. We might have got some news on Johnson and Johnson, and then we pushed back into like this little higher low that was, kind of breaking structure. Breaking structure would technically be these candles over here, which is what I'm targeting on Johnson and Johnson. These imbalance candles into this breakdown level, but um, whenever you're looking at like a hot, like a previous higher low that fails, and it's a very important higher low, and then you get a retest into it. It makes a lot of sense. Plus this like previous consolidation here, but afterwards I saw the sell side moves looking like hammer candles, but really declining sell side volume, followed by an inside bar off the hammer candle, and then two inside bars afterwards, almost three. So I was really, really, really just loading calls, kind of noticing how buyers were getting it above this bull gap open, and then my tolerance for bi-weekly JNJ exposure, which I was loading all of last week, and I think the week before. I was buying on this candle, so I was buying this over a week ago on bi-weekly. So that's actually this week's expiration, but it timed out perfectly with the expansion. I only have runners up 220% up here now, but my risk exposure for this one would have been something that looks like this: sweep, structure development, and then move. If it were to do something like this on a bi-weekly exposure, break base, and then look for the lower portion of the gap, I would just cut and mitigate my loss on the retest right here because it typically always comes, but that never happened. And then I just noticed how healthcare names were more or less just distributing, or I'm sorry, digesting their previous moves up, which is something that is really healthy for continuation of the upside trend. Um, this was also a really nice flat top resistance, and as you guys may know, one concept that I love to talk about is like how structure builds up into like a flat top resistance, and if there's no seller dominant volume patterns coming off of a flat top resistance, but they keep building out the higher low structure into that spot, then we'd likely have to expand off of it. That being here, 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 and here, and then we finally get the expansion, a little bull flag above it, and then yeah, it's just really nice higher lows that are carrying out. Really never a reason to really get out of this thing, and I already realized profit on this, and I did cut half exposure into Friday close, which kind of sucks, but it was off the 150 level, so it made some sense. I took like a 25% win, sadly, on half the size over here, just because I was getting really tired of how slow this was. But with slow volatility in the equity itself, also comes slow volatility that you're purchasing within the options contract. That's one thing that I love about Johnson & Johnson in comparison to like Moderna is the ATR, the average true range on this stock itself is a lot lower. So whenever you're catching moves like this, like 0.85% moves in the stock itself, you're getting paid way more than something like higher implied vol healthcare like Moderna. So that's why I was choosing this one. Pretty stress-free though. I never really went too red on this. I think my biggest drawdown here was 20%, but that was before I also was willing to add a little bit more exposure on some sort of base. And then I kept actually going green on these pops, but it never got the follow through. So I was a little bit red, decently green, or like break even for the whole entire trade. Not too shabby there. DraftKings. So I profit rolled short on this one over here, and then I carried it into Monday, and then I carried it into Tuesday, and then I finally carried it into CPI. Honestly, guys, this is simply put just a gamble. I was taking my chances with the CPI report itself, or maybe like some sort of bearish reaction, just given the fact that there's so much seller dominance here. Preliminary resistance, really heavy volume marked down afterwards on the earnings report. Decent sell volume afterwards, and then we put in this like higher low. That higher low never tested this previous resistance, turning now a support, and then it continued its way higher with higher low and then expansion followed by liquidation candle, just a mass breakout candle that was fully liquidated by a seller, and then from there we start finding the lower high. I shorted this pop, I shorted this pop, and I shorted this pop. So I was looking to roll my profits for a fourth time. I was just simply put, and I shorted this pop last Friday for 70%, and that was like 3/4 size on that trade. So shorted all these pops on a seller dominance distributive chart, and then I tried to short the fourth into CPI, given the fact that this was a really tight compressed range on DraftKings here, where I knew I could have been offsides, and I even said that literally in the chat. If we go right over here, I said Okay. I can't find it. I don't even know where it worked. Or I don't even know where it is. So, anyway, yeah, I mean, it was just simply put, just following the plan that I've really had established for myself, and the plan just didn't work out. Given the fact that the CPI did get a nice positive reaction and sent the market flying. ARKK also caught this random fucking bid with a bull gap beneath us that isn't filled. And then what happened was I was trading this short as with DraftKings as sympathy. I did that last week. If you go over to TNX, it's the 10 years yields. Um, this was looking like it could potentially bounce on this higher low trend, given the fact that like last week was a nice little green day as well as like a ARKK loss of the swing low, and some sort of like daily bear flag type of look where you're getting seller dominant structure and patterns. Um, was really intriguing to short this, but then it just started ripping higher and really heavy volume anomalies. So yeah, DraftKings is a little bit unfortunate. I swung it a little red into CPI, and then into CPI, I closed that position down like 50%. But yet again, a 50% loss, guys, on a profit roll is that's a profit roll, rolling profits. So if you're not successfully shorting prior to a report where it's essentially a little bit of a gamble, you're risking your actual cash. You're not risking profits of a previous trade, right? So it just all it really did was made my last trade worse, if that makes sense. So and I've been very clear about that. Um, so, what was the other one? Oh, fucking Meta. Okay, so Meta was a win, and a loss. Well, a win, break even, and a loss. This was a short side focus. Okay, so we're going to talk about this one real quick and then I'll wrap things up. Maybe I'll go over TLT, but TLT is something that's involved more in my longer term port. So something going on with my Discord, but yeah, we'll just uh, we'll just talk about this real quick. Okay, Meta, short side focus, in tech sell, watching for this one closely beneath 463 or a higher high sold failure in this bear peg. Should be a good one. Look at the secondary. Look at my other plan. Higher high sold, failure in the bear peg. Okay, the bear peg is technically above this little local high here on this candle, above 476 basically. Let's go over to the daily chart. Let's talk about it. And we'll talk about everything that I've seen. So, first of all, let's go to the daily. Let's talk about this massive daily spot right over like here. So this is just a massive daily level, just overall, just a massive daily level where you're getting a really strong buyer's bid, uh, hold after hold after hold after hold after hold, and then you're getting potentially the retest into it and the failure. Now I thought that could have been coming off of this spot leading into CPI. The fact that we were grinding our way higher on low volume within the market leading into a binary event is just something that is always going to be typically a short side focus for me, especially if it's back in a distribution. That's kind of what the market was showing, except the fact that, we're obviously in an outlier bull market where distribution schematics can already be completed or where they can fail, and then the distribution could play out from a weekly perspective, which meaning you go over the market over here. This could be the weekly perspective, but you go back to the meta daily and you're like, okay, yeah, this is a decent looking short side setup, but there's no signal here until you get above this high, fail that high, put a retest in for a lower high, maybe an ask pulls down off of the 477 high, and then from there you could short it. So I shorted this fucker right off the open on the bear gap closure, and then I started to find like a buyer getting completely absorbed up here within the tape, and then I saw this relatively strong shooting star candle, trading within like this massive spread bar. So there was a lot of volatility right off the open, but I was looking to short this, risking simply just the 476 level. I did so, and I took this down into here, which is bear gap progression, now being claimed as potentially bull gap progression. So it'd be like, okay, buyers claimed a spot. They're going to use that spot as now a territory to bid off of, and then develop structure off of that. That's how I trade my system, right? And that was the case, right? But I was reactive enough to scale some profit down here for a 55% trade. It was decent. And then I tried to roll my fucking profits on a failure over here. So I saw the failure over here, but keep in mind, guys, what is this? This is all progression that is being claimed now from a bid, from a buyer. So, okay, you sell it right off the open, you close the overnight gap, and then you push back higher, and then you push back subsequently lower. You put in potentially a lower high, but potentially a higher low. This is where that total structure development makes sense, and where you have to wait for that base and wait for the expansion from either a sell side move from the lower high to now a lower low, or a base, a base, a base, a base, and then a seller gives up, and then we expand higher with the overall market. It's exactly what happened. And then I tried to roll profits here, and then I sold those for like a 50% loss. So it wasn't necessarily horrible. I didn't really like lose much on meta. I was also short over here, and this was a 25% win. And I tried to catch the lower high. I did catch the lower high. And then I scaled some, broke even on the rest, and then it just based, and then we finally got a potential failure of higher low trend. But it put in a buy wick, it kept basing that progressive spot. I should have reacted to this right here, right? Sell bar, and then bought from the bottom lower range of it, and then inside bar, inside bar, inside bar, inside bar expansion, and then I mean there was just really no seller here. There was just really no seller anywhere. So I got toasted. I mean that's just plain and simple, boys. Just got fucking shit on. So yeah, I gave back all my profit on Meta from the morning there, and then the actual DraftKings profit rules what made me red. I did have Oracle and Johnson & Johnson runners, but I'm talking more about intraday trading. I'm technically not red on the day, but intraday trading red. Johnson & Johnson runners are up 200%, and then Oracle is up still at that 200% mark. And then I have the TLT, and then I posted the TLT thesis on Twitter. So yeah, that would be it for the video. I am going to cut it here.